Hello everyone, this is the 8th episode of my 2026 Portfolio Challenge series where I try to beat the market by testing 4 strategies that range from sensible to slightly unhinged. I started out with 100k each, and currently only one of the portfolios is beating the market, but we might finally be done being down. As you can see, every single portfolio here is doing better than last week, but so is the market, so this is just the market being up in general. Disclaimer, this is for entertainment and educational purposes only. I am not a financial advisor and this is not financial advice. This is all done on a paper trading account and these are all simulated trades with no real capital at risk. So we're just going to go quickly over the portfolios' performances. I didn't make any changes in the portfolios except for selling MO on the deep value one because it reached value. And then I want to talk about some of my watch list news and some of the global news. So the big ones, I'll go more in depth later, but the big one is this past week we had the Robinhood Venture 1 fund. It got published and then their January data overview finally came out. Then for this upcoming week, we've got NVIDIA earnings and Celsius earnings. And then I just want to talk a little bit about what I think is going to go on in Iran and some of the news about the tariffs and the GDP data that just came out. Again, I am not licensed to talk about any of this. None of this is financial advice. So this is just the change in the portfolios. On the right is last week's portfolio. On the left is this week's. We have a bit more cash because I sold a few covered calls. So just collected the cash on those. Then here are the earnings. Total earned through the lifetime of the challenge so far for each stock. You can see Hood is still clearly leading the loss. Then this is the deep value portfolio. So as you can see, I sold from last week, I sold MO, 10,000. And so I have the cash. That's it. Nothing else happened. And then these are the earnings for the deep value portfolio. Here's the choice value. So these are value stocks that I choose, not just based on a mathematical formula. The previous one was based on, just PE ratios and some math. So here I'm doubled down on Hood. I'm pretty heavy on Meta too and on Micron. So that didn't change much. The only thing that changed here was, again, I collected about $500 in covered calls income. And some of the stocks themselves, they rose a bit. So the percentage of the pie chart increased a bit. Then here are the earnings for the choice value. Again, Hood is leading this loss, but I expect this to flip with Adobe next week probably. And then Novo Nordisk, I'm already out. Adobe, I'm already out. So these are just going to stay big losses probably for the rest of the year. Actually, most of my losses are going to stay for the rest of the year except for Celsius. And then there's the meme stock portfolio. Currently, I'm full ported into Hood Leaps, so 2028 calls. And then GameStop, I made almost $8,000 previously. Yeah, I'm already out of GameStop, but I might go back in once I become profitable on Robinhood. So the Hood news. So they just started the Robinhood Venture 1 fund, which is a $1 billion fund in which they invest into private companies. Okay, you can't personally invest into these companies yourself. You can't choose it, but you can invest into a Robinhood Venture Fund. So it's like, how people talk about private equity and private ventures. So this is just a venture fund that Robinhood runs that you as a retail investor in Robinhood can invest in. And it's not locking up your money. So you get to invest in these pre-IPO companies as a retail investor instead of needing a few $1 million and to be considered a venture capitalist. So this is interesting. We'll see where this goes. I actually have a good feeling that this is going to be one of their biggest products this year, especially because SpaceX and OpenAI, they might not be willing to join now because a lot of their value is based on the hype and that it's hard to get the stocks and the funding for it. It's hard to invest in them, but I think once they see how much money this brings in, all the companies that are joining them, I think they'll break down and eventually also join the fund. And then the January data, so that came in my opinion, significantly better than expected because the sort of crypto winter that just started. So we've had a pretty big drop since the beginning of the year in crypto. It started out around 86K, then it went up and it's down pretty significantly on the year. So it's down 22.5% on the year. So this is considered, like a small crypto winter. I don't think it'll last, to be honest. I think people are too degenerate nowadays to let Bitcoin stay down low. So even with this crypto winter, we can see that Robinhood had solid earnings. Their funded customers, it grew. This is currently the highest ever funded customers. It's higher than October, which was the previous highest. And then their total platform assets. So it's not the highest ever, but it's back to October and November levels after dipping slightly in December. And they also had more deposits. And then this is the most bullish to me. The equity and the options, they're really high despite the market tanking. Now this is total trading volumes in dollars. So that means I think that they traded more often than they did in previous months. Now this does have a lot to do with the earnings that we just had. We had pretty big earnings with Google, Meta, etc. So a lot of that has to do with that. That's also why October had a lot of equity trading and options trading. And then February, I think, will be significantly higher than both January and October. And then crypto is 22.9, which is higher than 21.2, despite crypto being significantly lower, 22% lower. And then we can look over here and we can see the daily average revenue trades. That's higher than everything except October and September again. So I think that they are back on the uptrend. This is decently good news because a lot of people were worried that the crypto winter and the drop in the market would significantly reduce the revenue for this first quarter. So I think some of that is now entering the market and the market's going to adjust. I expect Robinhood to rise up this week a few percentage points, not significantly, but it might cross over 80. It's at 76 right now. And then I wanted to talk a bit about NVIDIA, what I expect, my projections for this year, and just in general, my opinions on NVIDIA. So the Wall Street expected revenue is 65.71 billion. I expect 66.6. I don't expect them to blow past earnings revenues. I don't expect some shock and awe number. I expect it to be roughly around the expected revenue, but I am expecting pretty insane forward guidance because we saw the CapEx guidance from Meta, Facebook, Apple. All those, they're having huge CapEx expenses, and that has to go somewhere. So it's going to NVIDIA, it's going to Micron, it's going to TSM, it's going to SanDisk. But I think NVIDIA and AMD are going to be the lion's share of this. So I think their forward guidance is going to be insane. And so that's why I think the market, I think it's looking for an excuse to go back up. It's just kind of scared. So I think this is going to be what the market needs to say, okay, we're fine. Let's keep going. I might be wrong. I've been wrong a lot in this challenge, as you can see, but I think the market wants to go back up. And then my projected price target, not for these earnings, but in general for the year is around 220. These are the projections that I use. These are some of the Wall Street estimates. So these are the upcoming Wall Street earnings estimates. And so as you can see, I look at the forward fair value of 4 quarters out. So that's 221. So we're rounding it down to 220. And with momentum, I think it can pretty easily reach that. Next up, I want to talk about Celsius a bit. Okay, so with Celsius just popped this past day after some news came out that their shelf space is significantly higher than people expected. So I am expecting a pretty decent beat by them. Not shock and awe, but I think it's going to be a pretty decent beat. So it jumped back up after dropping significantly. It's still significantly lower than it was a few weeks ago, back when I started the challenge. So, I exited at 53 after I started at 47, and now I was back in at like 47-ish. So I think I am up on Celsius here on both of the portfolios that have it. But I am expecting the earnings to just push this pretty high. And we can see that the average entry was 47.7. Then we can go here to the options, and we can actually see what the market expects the move to be. So you look at the at the money. I like to look at the bids. So the at the money bid is +3 and then -3. So we're looking at a 6-point move is what the market's expecting. And I sold calls on this in both the portfolios, so the choice value and the main portfolio. So I sold calls on this at the 56, which is a bit past the 54, which is the 6-point move. And it's still decently high cash that I brought in. So I brought in $72 per 100 shares of Celsius, which is more than 1%. That's almost 2% gain before even the earnings come out, which I expect will be good and will bump the stock up. So as you can see, I'm expecting 660. It's roughly a 3% beat. I'm expecting great guidance. I think a lot of the people forgot that they bought Alani, and together they're just gonna guide forward significantly higher. And so my current year expectations are once again 55. These projections show 60, but I think 55 is more realistic, especially if the market doesn't really recover. So I think it can still reach 55 without the market recovering. Now, a few of the stocks that I'm watching, Delphi debated entering like a week ago when it was in the mid 70s again, when it had that pretty big drop. And I commented on this in the previous episode, or yeah, I think it was last episode. It was in the mid 70s. And then I said that that's a really good entry. I do expect them to come all the way back up to 120 this year. Yeah, it's just been on a straight shot up since their earnings, basically, which it had a nice drop, but now it's just recovering, and I expect it to just go straight up to 110 here. I'm not going to go in because this is kind of expensive for me, but I do like the company in general. And then Rivian, nothing new here. They had earnings, not great, not terrible. You know, their revenues and earnings, they both beat. Their earnings were significantly better, but I think most people just looked at the forward guidance, and the forward guidance was basically what it was. So they didn't say anything too good about the R2 coming out, having significantly more sales than they expected it to have. That's why it jumped up, and now it's just been promptly coming down. I'll probably enter it around 14 if it hits that. And then when the R2 comes out, I fully expect it to go back up. And once they're profitable, which probably not even next year, considering their earnings. Let's see, their earnings. Yeah, they're still losing a ton of money. So once they're profitable, I expect the stock to be in the mid 30s, which, you know, that might be 2-3 years, but 100% in 2-3 years, that's a pretty good deal to me. So I am very bullish on Rivian, but depends on the price, and there's better deals out there right now. Then I just want to talk a bit about the macro news. So this was today, actually, or yesterday. The Supreme Court just ruled that Trump's tariffs were illegal. We'll see. Yeah, so he just put on more tariffs under a different rule. We'll see what happens. I think the market mostly priced this in because it was pretty obvious to everyone that the president doesn't have power to put on tariffs. That's Congress's power. I'm even surprised that the justices were 6-3. I thought it would have been a 9-0 pretty easily, but yeah, I don't want to talk too much politics here. That's just the news. I don't think the market's reacting to this news because it was basically priced in for the past month. And I don't expect too much to happen. I don't think we'll have to refund the companies or the countries that were affected. And certainly us as retail investors, we're not going to get any money back on that. And then the other big one was that the economy slowed down significantly. This quarter, it only grew 1.4% compared to the expectation of, I think it was 2.8%. So it's about half as big, half as large of a growth. I'm not sure that this says anything. I think that the market also mostly priced this in because anybody who's been looking at the numbers and the jobs data and how they're all getting revised down knew that the GDP wasn't going to be as high as people expected it to be. I've seen multiple YouTube commentators and I've read multiple articles showing that people expected it to be, the GDP, I mean, people expected the GDP to be significantly lower than the expectation. So I think this was also priced in, and that's why we didn't see much movement based on these data. And finally, the war in Iran. I fully expect there to be, in the next 2-3 weeks, I expect the US to strike Iran. I don't think it's going to be something insane. It might even have started, and we just don't even know. It might just be a show of force. I'm not sure. But mostly, I just want to say that I don't think that this is going to affect the market. I think the market's become pretty apathetic to wars in general and tariffs and everything that's going on. Thanks to Polymarket, everything is getting priced in pretty easily, and Polymarket's pretty accurate on these things. So, you know, the market's pricing in that there's going to be a war soon. It's not pricing in 50%, it's pricing in that this year there's going to be a war. I don't know what that pricing in looks like, but that's why I don't think that when the war does happen, the market's going to move too much. So I'm not expecting too much here. And then some of the moves that I made this week. So I said that I didn't buy or sell anything, any equity. I just sold covered calls on Celsius, Robinhood, and Nike. Nike had a good week, but their IV is still pretty low. I don't think that they're going to keep moving the way they have been moving, so I took a pretty safe one. I sold it at 68 for not much. Yeah, 68 for 42. The meme stock portfolio, I sold 83s, which is pretty close to the money, but I don't think Robinhood's going to move too far up this week. So even if they do jump up to 81, 82, I'll probably have time to roll this out. And this is pretty low value for 83, which is only a few bucks over Robinhood right now, given how volatile it's been. But it has been trading within a very tight range the past few days. Ever since this big red candle, It's just been trading within the bounds of this red candle. And I don't read much technical analysis, but this is like an inverting triangle or something. A lot of people consider this a bullish sign. I don't believe in that stuff, but I do think that Robinhood, it's being suppressed currently, and I do think it wants to jump back up to like the 85, 86 soon, and it's probably going to gap up to 100, 105 in the next 2-3 months. Okay, that's it. Thank you guys for listening, and I'll see you guys next week. Bye-bye.